G'day folks, Jim here from Orchard Forex. It is Saturday the 19th of June. Well, the Fed certainly startled the markets on Wednesday with the hawkish tone at the FOMC meeting, and the message was underlined by the St. Louis Fed Chairman James Bullard on Friday when he said that he's leaning towards supporting an end to the purchase of mortgage-backed securities given the state of the booming housing market in the States, and that he suspects that the Fed may need to raise rates as soon as late 2022. So his comments caused the US dollar to extend its bid tone, while equities sold off as risk aversion took hold, with traders now preparing for the inevitable announcement that tapering will commence and that the Fed will begin to reduce its bond buying program. This is eventually going to lead to higher interest rate yields and borrowing costs, although interestingly, long-term US rates ended the week at lower levels than they were trading at prior to the FOMC meeting, with the 10-year bond yield now back below 1.5% at 1.44% heading into the weekend. Aside from the dollar and the stock markets, the other notable performers were the yen, which saw increasing demand as traders moved back into risk aversion mode, while the precious metals have seen a steep sell-off, pressured lower by the strength of the dollar. And elsewhere, Bitcoin saw a 6% sell-off. I don't really follow that, but for those who are interested, technically it does look as though it could go an awful lot lower yet. Given the reaction to the Fed's hawkish tone, which could lead to a continuation of the current moves in the coming week, if we see further hawkish comments from various Fed board members, we'll go and see what the technical outlook is on the charts. And we'll start with the dollar index as per normal. Okay, so here we have a daily chart of the dollar index, and as you can see, we've had a pretty serious bounce here, taking us back to the 23.6% FIBO target of the whole move down from the highs of March 2020, and bottoming out here in January of this year. As I say, we're now back here at the 92.30 level. And if we can take this out in the coming weeks, this high here will be the next port of call, 93.30. So that's 100 points away, and then we can march on towards the 38.2%, which is yet another 100 points away. It's 94.5 or so. And the dailies do look positive. So at the moment, it looks as though we, as far as the dollar index is concerned, we should be looking to buy dips. Now the 200-day moving average is this pink line here, and that comes in at around 91.40. And I would suggest if we do see the dollar back down around those levels, which were a bit back, or I guess it's probably back about 120 against the euro, you need to be selling it there, because I think eventually, selling the euro, that is, buying the dollar index, and I think eventually we're going to take this out and at least head back up to this level here. As I say, the dailies look positive. If we go forward to the weekly charts, they too have turned higher. The indicators look as though they've got some legs to them. So, like I say, I'd rather be buying the dollar index, looking for levels to get long of dollars against whatever currency, and eventually take this out. And I'm looking for a move towards this sort of 93.50 level. Now, what we'll do, we'll go and have a look at what that does mean for the euro. So here we are, and we'll start off with a daily chart of the euro. As you can see, we broke through all sorts of levels of support in the last few days. The 55, the 100 and the 200-day moving averages, the rising trend support from the February 2020 low, and then eventually the first FIBO level right back around here, around 119.5, finishing on the low of the week just above 118.5. Now the daily charts look as though they're definitely pointing lower. The weeklies are pretty similar, not quite to the same extent, but they do look as though they're tipping a little bit lower. And the 4-hourly charts, they are suggesting they're very oversold. They're still looking heavy. It wouldn't surprise me to see a bit of a bounce, but quite honestly, I'm not really sure how far we're likely to go, but I would suggest if we got it back into the 119.5, 120 area, I'd be looking to sell the euro there. Now, the most interesting point of the euro for me is if we go back to the daily charts. I'm not really sure if this is going to be a big head and shoulders that we're building here. If so, we've got the neckline 117.5. Now from the top here, 123.5 down to the base here, 116.5. If we take that's 7 big figures, exactly 7 big figures. If we take 7 big figures from the neckline, assuming the neckline breaks, then we're back down around 110.50, 60, somewhere around there. That's a long way off at the moment. Where are we? Back down around this level here. That's a long way off. But if this level gives way, then I suspect that is the way of it. As I say, the dailies are looking very heavy to me, and I think the weeklies could yet pick up steam. They're not really doing so much yet, I guess, but they're certainly looking a little bit heavy. And I think we're probably going at some stage to push lower. Now we've got the 200 week moving average here at 115.75 or so. So eventually maybe we can get down there. That's still 300 points away. But in the meantime, look for. I think we're certainly probably going to go to this or 117.60. If we can get through there, there'll be support here. So 117, the figure. And again down here at 116 the figure, as well as the 38.2, so just under 117. So those are all targets. I suspect we're heading that direction. It wouldn't surprise me to see us do a bit of messy consolidation around here, and possibly a bounce. I'd definitely be selling into bounces. Like I said, I don't think we're going much above 119.5 now, and I'm really looking from 119.5 if we can sell it there. I'm looking for a move back towards this 117.5, 117. Moving to dollar yen. So dollar yen's not doing an awful lot really. It's holding on above 110, but it's the yen is not losing ground to the same extent as the other major currencies. So in other words, we're seeing yen strength, particularly on the crosses. I'll go and have a look at euro yen in a minute because that might be worth trading. So as far as dollar yen's concerned, I'd probably steer clear of that. I think there's a lot easier trades around. The weekly charts not telling us an awful lot either. I wouldn't be surprised to see us try and break this sort of 110.80, 111 area, but I think upside progress for the dollar, if we see it, is going to be slow because I think the principal movements in the yen are going to be through the crosses, and as I say, we'll have a look at them in a second. What else? Sterling. So sterling made a new high, just 142.5, 142.47 a couple of weeks ago. And since then, it's consolidated and then started to accelerate lower into the weekend after the FOMC. And it's come back to sit right on this pivot line, which we really need to go to the weekly charts to be able to see this. So here we are. We're sitting right on that support, but I suspect we are going to go through it and break to the downside, in which case, back to the daily charts here. We've got this support here. This is at sort of 137.75. But if we go through that, these lows, that brings us back to sort of 136.5 or so, and then the first FIBO level around 135.60, which ties in with the 200-day moving average. Once again, I'll be looking to sell rallies in sterling. The 100-day moving average now at 139.40. I think if we were lucky enough to see it up there, that's a great selling opportunity because I think eventually we are going to take this out, and we are going to head lower. The dailies not showing us an awful lot at this point in time, but they're definitely losing momentum and gaining downside momentum, I should say, probably. The weeklies are still pretty flat. So maybe euro sterling, sell euro, buy sterling, maybe a bit of a trade, but that cross has been very choppy recently. So I think there's probably better things to say. If I'm looking to be long dollars, I'd rather be long against the euro than against sterling. I think there's probably more legs in that. Moving forward to the Aussie. Now the Aussie's done absolutely nothing for months really. It's just tracked sideways until the last couple of days of last week. Ignored the very good local employment data and is down at 74.75, having broken below both the 1 and the 200-day moving averages. The daily indicators are beginning to pick up steam to the downside. So as with everything else, I think looking for dollar strength, I'll be looking to sell the Aussie into. I'll be looking to sell the Aussie into Aussie strength. Looking for the if we do see any Aussie strength, the 4-hourly charts are very oversold. So a bit of a bounce would not surprise me really. If we do see a bounce, I guess this low back here, 75.30, that's going to be resistance now. And above there, we've got sort of 75.80. So somewhere in that 30.80 level, I'd be looking to sell it. And I think the dailies are telling us to be short. The weeklies are also looking heavy. So I think there's a bit of mileage to be had on the downside. The 200 week moving average, that's not till 72.30 or 40 or so. So that's 200 points away. In the meantime, we've got this FIBO level here at 74, the figure of the whole move up from the low. So I think we're probably going there, and as I say, I'll be looking to sell. And I'll be looking to sell anything above 75, the figure now. I think as a trade. But if you want to be a bit more conservative, 75.30 to 75.80. Much the same probably applies to the Kiwi. We're going to have a look at that quickly. Here we have a daily Kiwi chart, and once again we've broken through the 100 and the 200-day moving average and the first FIBO target. Kind of making a bit of a base here around these previous lows at 69.30. But if we take this out, there doesn't seem to be an awful lot. I guess these highs here will provide some kind of support, 67.90. But realistically, we're probably looking at a move back to 67 cents. That's a long way off at this stage, but it does seem to me to be the direction of it. Once again, the dailies, all the indicators seem to be pointing lower. The weeklies equally look pretty heavy to me. So selling rallies in the Kiwi seems to be the way to go. If we're looking for levels to pick, and we go back to the hourly charts, the hourly charts we've got some mild bullish divergence here, so I wouldn't be surprised to see some kind of bounce on Monday. And the initial target would, I guess, be somewhere around 70 cents, possibly just above 70.15. I'd leave a stop loss above 70.20 or so. But if we saw it back at 70 cents now, given the direction of the momentum, longer term momentum indicators, I think that's probably a pretty good area to be looking to sell into. So that's it for the currencies. We'll go and have a look at what else is suffering some pain. Gold for a start. Okay, here we have a 4-hour chart of gold, and it was unable to break through that 1920 level, which was the 2011 high, I think it was. Was unable to break through that last week, and has since accelerated lower, particularly since the FOMC meeting, and looks very heavy heading into the weekend. The 4-hour charts, as you can see, are very oversold, so some kind of bounce would not surprise. We're sitting close to the 61.8% level, so I don't think we're going to go sharply south from here on Monday, but the direction is pointing lower. The dailies equally pointing lower. And we, once again, as with everything else, we've broken through the 200 and the 100-day moving average. The weekly charts not telling us an awful lot, perhaps, although they have turned sharply from a couple of weeks ago. We've got support, minor rising trend support down here, I suppose, it's just above 1700. I wouldn't be in the least bit surprised to see that. That ties in with the 100-week moving average at the moment, so I wouldn't be surprised to see us go down there. Although, having said that, as I say, the 4-hour charts are telling us look out for a bounce. I'd be looking to sell into a bounce, and I guess this peak up here, just shy of 1800, is probably where you look to sell it, with a stop loss probably above this low here. Call it 1810, 1815, something like that. I have a stop loss up there, but that's the plan of action for gold. Oil is not doing an awful lot. I'll have a quick look at it, but there's better trades out there. So West Texas Intermediate, that's been on a pretty good cruise higher on the back of expectations for global growth. But if global growth is going to be slower than previously thought, and interest rates start to move up, which is going to raise borrowing costs, we might see oil top out around here, around this 70. I don't think it's going to come off a great deal, because the outlook for the global economy is still pretty strong. But the daily charts, just looking a little bit toppish perhaps. The weeklies, not telling us an awful lot, but I mean, we're yet to see any sign of a reversal. So maybe we just do see a slow grind higher. Like I say, I think there's easier things to trade this week, namely being long of US dollars. But longer term, I do like oil higher. I think we're probably going to head eventually to this peak up here, which was sort of 76. I think I've mentioned that before. And if we were to get above there, then I think we can get up to this next FIBO level, but that's a long way off at this point of time. But like I say, I think there's better things to look at right now. One of them probably being short the stock markets. We're just going to have a quick look at that. Okay, so here we have a daily chart of the S&P 500. And as you can see, we broke the rising trend support on Friday. The indicators are not showing us an awful lot on the dailies, but I wouldn't be surprised to see further weakness in the week ahead. And the first port of call, I guess, would be this low, these lows here, which tie in roughly with the 100-day moving average. That's around 40.40, so that's another 100 points lower, and that would not surprise me in the least. The thing we really need to look at is the weeklies, though, and they really look pretty toppish to me. And we've got this bearish divergence, which I've been talking about for ages. It's taken a while to set about its work, but I really think now that with the MACDs particularly having moved lower, it wouldn't surprise me to see a move back towards that 4,000 level. The same applies really to the other markets, although the Nasdaq had a reasonable week. This is a 4-hour chart of the Nasdaq, and it actually made a new all-time high on Thursday. Gave up a few of those gains on Friday, but and the 4-hour charts do look a bit heavy. The dailies still look quite constructive, really, and the weeklies. We'll have a quick look there. Well, I'm not sure what to make of the weeklies. We got this huge bearish divergence, but the Nasdaq's just taking not a blind piece of notice. I suspect eventually we are going to see a bit of a move lower. There's no sign of it yet, as I say, really, though. So I think the broader indices, the S&P is probably the one to look at. As far as the Aussie market's concerned, we have here a 4-hour chart of the ASX 200. And we've seen quite a decent correction off the high. We got up to 74.02, I think it was earlier in the week. We've come back to finish best end of 200, 150 points lower, sitting on some minor support here. But I suspect that's going to give way earlier in the week. The 4-hour charts look heavy, and a move back towards 7,200 and possibly lower, 7,180, seems to me to be highly likely. Like I say, the 4-hour charts look heavy. The dailies not telling us an awful lot at this point in time, but overall I think I'd follow the sentiment that we see in the other markets in the S&P, and right now I'd be looking to sell rallies, stop loss above 7,400, and really looking on the downside for a test eventually of this sort of 69.80, 7,000 area. That's 250 points away, but it does seem to me that the major US indices are going to head lower. And I think the Aussie might underperform. Don't forget, we've also got end of financial year this week, so that there might be some book squaring, some selling to pressure the downside for the local domestic stock markets. Come July the 1st, that might be a different ball game altogether, and we might see another rally. But until then, I suspect we might be a little bit heavy. That's about it. We'll have a look at a couple of the crosses, Euro Yen, Aussie Yen. Okay, so here we have a daily Euro Yen chart, and as you can see, we've had this long-term uptrend lasting over 12 months. That might have come to an end now because we've broken the rising trend support, but we remain above the 100-day moving average for the cross. If we break that, then I guess the next port of call are these lows down here, which tie in with this FIBO level. That's 129.5, currently at 130.70. So what I'll be looking to do at the moment, I think with the daily indicators are pointing lower, it's looking to sell maybe back towards Friday's high, so 130, 130, probably a stop loss above 131.5, I guess, something like that. But really looking for a test of this 130.30 area where the 100-day moving average is, and then moving down, perhaps this 129.5 area. Just have a quick look at the weekly charts, where once again momentum does seem to be topping out a little bit, so further downside wouldn't really surprise here in the cross. And I think although you can't really see it on the weekly chart here, having broken this line, I suspect we are probably going to go back down towards these lows down here anyway. Oh, that's 128.20, that's some way off. Before then we've got these lows here, as I said, about 129.5. Aussie Yen. Here we've got a daily Aussie Yen chart, not too dissimilar to Euro Yen. We're still holding above the highs here of March, the March lows, I should say. We're still holding above those at the moment. But if we do break below 82, there doesn't seem to be an awful lot until we get to sort of the 200-day moving average. And this original pivot that I was looking at for a while, but that's down at 80.30. I think we're heading in that direction. Once again, I think you look to sell rallies, and this 83.60, where the 100-day moving average is, that would probably be a level you'd look to sell at, or at least keep your stop loss above there, because if we do go back above there, maybe we've got this one wrong. So that's worth keeping an eye out for. So that's about it as far as the currencies go this week. We'll have a quick look at the calendar. Okay, so as far as the calendar goes, there's bits and pieces going on throughout the week, but I think the main focus is going to be on central bank speakers, with Fed Chairman Jerome Powell testifying during the week. So Monday sees us start off fairly quiet. We've got the Australian retail sales. There's also a PBOC Chinese interest rate decision. And Christine Lagarde will be speaking, but there's really very little else out apart from that. As far as Tuesday's concerned, as I say, Powell will be testifying on Tuesday. I mean, ahead of that, there's really very little going on at all. And then Wednesday, we get the PMIs, the manufacturing services and composite flash PMIs coming out. Then there are various other central bank speakers. It looks like the Fed's Bowman and Rosengren are going to be speaking, and Christine Lagarde will be speaking again at the ECB. Thursday, we've got the German IFO and its Bank of England Day. No changes expected there, and all the focus will be on how the governor sees the economy performing in coming months. We have got the durable goods coming out of the States, and also the PCE figures. And then we've got more Fed speakers. Williams will be speaking. Schnabel, ECB's Schnabel will be speaking. Friday, once again, further Fed speakers, the Michigan Consumer Confidence, and the, as I said, the PCE numbers. But that's about it. It's fairly light on data really throughout the week, and it will be central bank speakers that the focus remains on. So that's about it for this week. Have a very good week's trading, and we'll talk to you next week. Cheers.